It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners right here at Korhorn Financial Group. And here with me in the KFC studios, as always, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
Well, after 3 years of administrative forbearance, student loan repayments are scheduled to start next month. So what are the repayment strategies available to you, and what should you do now to get ready? That and more on this episode of Wise Money.
Does it drive you nuts when they change the meaning of terms? We had a little debate before we started recording about, well, wait a second. In this context, forbearance means this, but I'm pretty sure that all interest rates were set to zero and payments were paused, and that's not officially forbearance. So yes, thank you for being precise, Kevin. Administrative forbearance, even though they just made up that definition and that term as well.
Well, precise is a nice word for what you usually call me, Mike. But I think it does matter. I mean, words matter, and the meaning of words matter. And you take this word, and it means, this in a certain context. And so you introduce it in a different context and change the meaning.
Yeah,
I'm like,
crazy.
no, he can't do that.
That's hard on the old guys, right?
Oh, my. Let me tell you. Let me tell you, Josh.
It's hard on me, too. If you have any questions for the program, we would love to hear from you. You can call or text us 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com. All over social media, you'll find us there as well. Search the Wise Money Show. Okay, guys, I'm just going to say it. I'm surprised that they did not go through with canceling student loans. I am, and this is not a political show. You guys know I'm not very politically charged. I really am not. However, and I don't know constitutional law like the back of my hand either. So I have no idea if this was constitutional or not. I don't know. I just know when someone utters the term in my house, hey, we're going to go get ice cream. We have to get ice cream. There's no way you can go back and say, you know what? Things changed. Something came up. We can't go get ice cream anymore. No, it's like you have to get ice cream.
You must be a better parent than me, because sometimes plans change, and we've been teaching our kids many times that.
I know. Well, listen, I have to tell you, there is compliance, and once it's uttered, it is as good as law. Yeah. and the three little attorneys that I have that used to be little attorneys and are now big attorneys. They're not even attorneys, but they act like it.
So are you guys surprised that this didn't go through, or what have you been telling clients as what to expect?
I've been telling clients I'm 3 years into the big surprise. And so this is just a small surprise within the series of surprises that comprise the big surprise. And I was surprised when they came out and said, hey, we're going to do this. I was surprised by a number of the programs that came out, the PPP, the EI.
It all seems crazy.
All the alphabet soup where the government basically came out and said, hey, here's what we're going to do. I think the issue with student loans and even just putting this administrative forbearance where I'm bringing the interest rate down to zero and you don't have to make a payment, that psychologically I'm saying that's done by someone who doesn't have a good grasp of internal finance and how people are affected. Because you think missing out on ice cream cone's a big deal. Hey, try missing out on, hey, I've got $8,900 left on my student loans, and I'm getting $10,000 forgiven. Like, I am home free.
Right.
Like I want to count that run. Like, I scored.
Yeah, that's right.
That was a gimme, and they took it away.
Yep.
Yeah. Like they called me out because of a technicality at second base.
But man, if they're promising things and it's somewhat experimental, right? Like they don't know if they're actually allowed to do this. Is there a mechanism for this in the structure of the government? But made some promises anyway, and I don't know. I know that you just said we're not political, but man, that feels like a politician move, doesn't it? to promise something and then we'll figure out how to deliver on it later.
Well,
I just need your vote right now, please.
Yeah, it is. I mean, it's definitely a politician move. And you say, well, on both sides of the aisle, they're a bunch of promisers. And you say, well, I know what the promises have been. Promises made, promises not kept.
Well, the crazy
on both sides.
On March 13th of 2020, they moved all eligible or federal student loans, most of them, into this administrative forbearance, and all interest rates were moved to 0% during this time period, and payments were paused. You didn't need to make a payment. And they originally did that for, a year or so, and then they just kicked it along, and delayed it. It's been 3 years. And now that time is ending. So whether or not you're in shock or you're grieving over, I was supposed to get this cancellation of forgiveness, this benefit, and now I'm not going to have it, and whatever. Student loan payments are restarting. They are. Interest starts accruing on September 1st. Your first payment is due October 1st. So it's time to be ready. And we wanted to spend some time talking about, well, what are the right repayment strategies? And you might say, repayment strategies? What's wrong with you guys, Captain Obvious? It's just start making payments. Now there's more to it. From a financial planning standpoint, there's more to it. And the way we look at it, there could be more than this, but I'd break it down into you've got 3 different strategies. You've got 3 different approaches. And the first one is our favorite. This would be the ideal. And I'm not sure what percentage of people fall in this camp or not, but this is we did a few shows on this and plenty of other content as well. But okay, you don't need to make a payment. Keep making a payment, but not to your student loan. Make a payment to yourself, build it up in cash so that 2 things happen. One, you keep that component of your budget intact, so there's no shock when it turns back on. And 2, whenever payments do restart, you've got a chunk of change to throw at it.
Well, I mean, you said this was our favorite because it's the ideal, right? That if someone gives you an opportunity to pause on a certain payment, whether that is a student loan or anything, maybe you change jobs and you have an opportunity to pause on your retirement savings because you're not eligible to join that new retirement plan just yet. Anytime there's like a disruption to your normal cash flow, the risk is that dollars that previously were already spoken for, they were already automatically going in a certain direction. Now they have no direction. You have to give it one. And what you're describing is saying, hey, stay in the habit, stay in the pattern of continuing to make these payments. Just make it to yourself. Set up a separate bank account and start stockpiling that cash, because someday either that loan was going to be forgiven as everyone had hoped and planned, or it's not, and you're going to need to take a chunk of cash now that you've built up and apply that moving forward. More importantly, though, those payments are going to have to get redirected. You're going to have to pick that back up again. And I think there could be a lot of people who are facing a little bit of a shocker to their budget because they've been needing that extra cash flow to make ends meet potentially.
Well, we'll get into those in a couple other strategies. But this concept of keeping that budget item kind of earmarked or still in there, this concept, Kevin, early in my career, one that you've shared, but not in regards to student loans, but I'm envisioning there's a few ways we can apply this, but the individual who's come and they're looking for some, last minute retirement planning, and say, for example, in that 5-factor retirement plan, we can live on $5,000 a month. Okay, well, what's your take home right now? 7. All right, we'll start living on $5,000 a month right now. Prove that it can work for these last 2 years of your working career. And what a novel idea. It's sort of a great idea hidden in plain sight to most people. And because what do you do? Well, I've got $7,000 of take-home income. If you only spend $5,000, well, then you're saving an extra $2,000. Bonus. So you've not only proved that you can live on $5,000, but you've built up additional savings as well.
See the Bernard paradox.
It feels like this could be another spin on the Bernard paradox. Another way to apply this is if you're looking right now at, well, I need to I'm hoping to buy a house or get into a bigger house or something. Well, calculate what that mortgage is. If that's more than what you're spending for housing right now, then start making that quote unquote payment right now. Keep your normal payment, but the excess that's supposed to be going towards that new mortgage, start directing that into a savings account so you get used to what that new payment is. So, okay, so there's a few different, complexities here with this first strategy. What if you have enough to pay your full loan off? What if you don't? What's the strategy? Within that strategy, we've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show. There's right here on this channel, 10 a.m. Eastern Time, every Saturday morning. Also on podcast and YouTube also on podcast at the same time as well. And then also on a few local radio stations in our area, which is why the content is sort of broken up and as long as it is. But for more direct content directly to you, more palatable, 8 minutes, 10 minutes, something like that, make sure you hit that subscribe button, turn on notifications. We drop new content, next wise step videos that air right here on this channel all throughout the work week. So hit that subscribe button, turn on notifications. If you like the content, leave questions below as well. Appreciate it.
Man, 3 years is a long time to be on pause.
Oh my.
That's a
new
lifetime
pattern.
dude,
I know
right?
that yes, the folks that did this and kept that habit within their budget. That I'm just gonna say, it's likely very few. It's incredibly the discipline required to do that.
Yeah, but it goes back to the very first habit of highly effective people, but also of future financial successful people.
Mm-hmm.
And that is they've been proactive.
Sure.
So at some point, your student loans are going to restart again. And if they forgive them, great. But if not, I'm proactive. I'm prepared.
Yeah.
And so I want to get into a few of what if I have enough to pay it all off? What if I don't have enough to pay it all off? What if...
Well, I think, to me, I like the idea of answering the question, what if I have enough to pay it off? Because then we're answering the question, what are the reasons for me to keep my student loans?
Yeah.
Which I think we need to answer those questions.
All right, here we go. Student loan payments are set to restart next month. Are you ready? What's your strategy? We're helping with that and more. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media. Wherever you're at, we are there as well. All right. Student loans, they're restarting. And again, whether you're grieving or frustrated or mad about the potential cancellation, that hasn't happened, has not gone through. And part of the debt ceiling plan said that was passed on June 2nd said we're no longer going to kick the can down the road. Student loan payments are restarting. Interest is accruing starting in September. Payments start October 1st. So what's your strategy? Ideally, for the past 3 years, gosh, I mean, how long does James Clear say it takes to build a habit? 3 years? So I have no idea, and there's lots of experts that have different opinions on this. Conventionally, they've said 21 days. It takes 21 days to build a habit. So that habit of paying your student loan is long gone if you didn't keep it going. But we've been encouraging, and hopefully, I know a lot of people that have done this. I certainly wouldn't say it's the majority, that continued making a payment, but not to their student loan, but to a savings account, so to themselves. So they kept this as a line item in the budget, so they didn't get used to it and build a different habit. And second, they were building up cash and earning some interest along the way. If you were able to do that, and now you've got enough to pay off your student loan completely. I do know a lot of these folks where they said, gosh, if government pays it off, great. If not, I'm ready. Now that student loans are coming back online, should you pay it off completely? Or do you wait and see if the government comes up with plan B like the administration said, or what?
I made an awful list. Quite possibly the most awful list I've ever made in the history of the Wise Money Show, and it is reasons to keep my student loan.
Oh yeah, I hate it.
I know. I hate that title. I actually hate the list. But you can't ignore it. And so this is why if it was easy, everyone would be very successful financially. And the reality is the people that are successful financially, the people that did keep making their payment and have that money set aside, they make it look easy. And you talk to someone like that and you're like, well, yeah, it's easy for you, Mike, because you're just that way. But it's not easy. But if you said, why might I keep my student loan in place? Who knows what's going to happen politically? They might come up with a loan forgiveness plan.
Good.
If I have a loan, it will get forgiven. If I don't have a loan, as far as I can tell, there's no forgiveness, and it's unlikely they'll do retroactive forgiveness. So that would be one.
I hate your list.
I know. No, I know. I hate it too.
Do they get better or worse?
No, you just bear with me. Now, I might qualify. And again, as we said at the beginning of the show, we are not experts in this area. We are experts in financial planning in the 6 areas of CFP. We're not student loan forgiveness experts, but there is income-based forgiveness. And if you're on a program like that, you might want to stay on a program like that. Another is you might have a very low interest rate. Your student loan might be the lowest interest rate that you have as you look at all of your various interest rates. Because here's the thing. I have to confess, I have a financial planning client who's also my cousin, and he was thinking about helping one of his children with their student loans. And I said, look, just pay it off. And he said, well, it's at 0%. Why would I pay it off? I'm making, 25 basis points or 1/4% in the bank. I'm like, dude, 1/4 basis point versus the peace of mind knowing that it's gone. Like, pay it off and get your peace of mind. Well, guess what? His online money market account now is paying close to 5%.
Yeah.
And so, and that was unforeseen by me. It was not knowable.
Yeah.
So interest rates, the entire interest rate environment has totally changed. Your student loan interest rate might have been the most expensive interest rate you had 3 years ago, and it might be the cheapest one right now.
So keeping the cash in the bank, there's arbitrage. You're making more interest there than student loans. A lot of student loans have a higher interest rate than what you think, by the way. So that's not
That same concept doesn't just apply to student loans either, right? I mean, this could be your mortgage. It could be some other loan,
Sure.
car loan or something that you locked in 2 years ago at obscenely low interest rates.
Sure.
And now you, as you point out, Kevin, you could be earning more on your bank accounts than you're paying in the interest.
Yeah.
I had a friend reach out who's receiving a settlement from an accident a few years back, and he asked, well, hey, should I be paying off my mortgage right now? And first question was, well, what's the interest rate on that mortgage? Mm-hmm. And yeah, it's one of those situations where their mortgage is costing them almost nothing. They're earning more on their bank account. Boy, the risk of not paying it off, we could probably get into those. That would be a whole nother list.
Sure. Yeah.
But it's hard to not make the math argument on, yeah, you're earning more than it's costing you. That's a good leverage situation.
So there's a science or a math argument, and there's an art argument, right?
Uh-huh.
So external finance is what is the math on this thing, but the internal finance, that is an important piece as well. And I want to give a nod to that. I want to acknowledge it and not say it's not important or it doesn't exist. But I don't. This is why there is context in your financial life and in your financial plan.
Yeah.
And you want to be figuring this out. Okay, so I've got more, Mike, where that came from if you want to. Okay.
your best one that's left on the list.
Okay. Oh, come on. I got a couple more. So I want to keep using the student loan tax deduction.
I knew that was on there.
Okay.
But here's the issue with that student loan tax deduction. It's always a percentage of the actual cost. It's like, should I keep my mortgage around because I'm still itemizing my deductions? No, the cost is the total interest. The tax benefit is a percentage of that interest. So again, there's a mathematical way you can determine whether you should do that or not.
Okay, I'm done then.
There's
a bunch more goodies.
You just kicked your puppy right
What
in
are
front of
your
you, didn't
other
you?
What are your
telling
other
you.
financial goals? And if you've built up this cash and said I've earmarked it for student loan payments, and now you're recalibrating and looking at your entire financial life, and you've got different financial goals that maybe are a higher priority. Now, I would tell you to confirm that that's right. Don't just rely on your own emotions. Work with your CFP to confirm that that's right. But if that's the case, maybe you don't. Maybe you put a chunk down on your student loans. Maybe you don't, and this cash goes towards a different goal completely. So the point is, if you were proactive, meaning you were aware, listen, at some point these student loans, I'm going to have to start paying them, and gosh, if I get this blessing where they're paid off, I'll be in a better position. If you were proactive, you now have options. Financial planning, comprehensive financial planning, is about creating as many options for yourself as possible and then choosing the very best one. So you've got choice.
That's why you have to reframe the question. It's not, should I take this cash and pay off my student loans since I've been building it up and I could now just wipe the thing off? The question should be, what is the best thing I can do in my financial life with this cash? And that expands your thinking, right? That gets you looking at more options, as you said, Mike, more financial goals, more objectives that you could be achieving with these resources that you were proactive enough to build up.
I want to just be clear for those that maybe are just tuning in right now or aren't fans, don't listen to the show regularly or whatever. Know our heart here. This is not, well, they're telling you the reasons why you may not want to pay off your student loans because they're going to tell you to invest those dollars. No. You've got to look at all 6 areas of your financial life to see what makes the most sense because, gosh, guys, I know we're playing devil's advocate and wanting you to just pause and make sure this is the right choice. But by and large, I feel like student loans, it's a debt that you incur early in life, and if you let it take a permanent resting place in your financial life, there's going to be a governor on how quickly you can make financial progress. It's going to slow you down. And so to me, the bias would be get that thing paid off as quickly as humanly possible so that you can drive and go towards your financial goals, the rest of your financial goals, as quickly as possible.
Until COVID, for my whole career, I always talked so strongly about getting your student loans wiped out.
Yeah.
Because it is one of the riskiest forms of debt. Up until COVID and all the talk about just the government waving a magic wand and erasing your debt for you, I would tell people the only way that debt's going away is if you do the hard work to make it go away. You have to pay this thing off. So don't let it linger because it's a debt that you don't have as many protections from.
Call me naive or altruistic, but I still believe that that's true.
I do too.
So be aggressive. Work with your CFP, confirm, be aggressive. Now, there's 2 other strategies you may need to consider with repaying your student loans. We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. That's good. Thanks for that list because that was fun.
Well, dude, you didn't let me get to the most important one. The most important one was don't pay off that student loan, invest the money. I'm just kidding. No,
you set him up and he was shooting him down. That was kind of fun to watch.
That was fun to be part of.
No.
He was over here salivating.
I know.
Did you see him? Like drool running right down his chin.
Well, I know. Everyone wants to be me, Josh. It's just a little...
All right, so 3rd segment, and now this is now we're talking to the majority of the people, is, maybe I saved that first payment, but then it's been, So how do you get your financial life ready to start these payments again? And that's 3 bank account system, and that's debt snowball, and that is setting an aggressive goal, calibrating your other goals. So this is a full segment for sure.
Because the debt snowball... I mean, said more precisely,
it's a snowball of debt.
No. Because the consideration that we had in the last segment, it was if I have this chunk of money that I've been setting aside, I've been faithfully making my payments since March of 2020, but I haven't been making them to the student loan company. Now the consideration is my student loan the only debt that I have?
Right.
If it is, then it's a much simpler equation. If I have multiple pieces of debt, if I have a car payment, a house payment, and
credit
cards, now where does that money go? But I'm telling you, if you just I try to encourage, especially the younger folks. I spent some time this past week with the younger guys on the team, and I said, a credit card is nothing to be afraid of. It's a tool, but do not use it improperly ever. Like make the commitment. A part of the Constitution that I live by is I will not pay credit card interest ever.
Right.
Mm-hmm. And then just don't do it. Figure out your problems with part of the solution set being, I don't pay credit card interest.
Agreed.
Sorry for the rant.
Let's go.
Let's go.
Are you ready to begin making student loan payments? Oh, that just sounds terrible. Don't change the channel yet. But what's your strategy for doing so? We're going to help you with that and more. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFC studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Follow us there, subscribe, whatever you need to do, and then rate the program. We appreciate that. It helps others who are looking for content on wise financial habits. It helps them find us as well, so we appreciate that. Okay, we're talking about the bad news. Bad news, student loan payments are for real. It's back after 3 years. It is the largest amount of debt out there other than mortgages. It has been growing at an astounding rate over the past 20 plus years. We have a student loan crisis. We have a college education cost crisis issue. To us, if you don't look at it at the macro level, the high level, at an individual level, it's a financial planning problem. Or not just a problem, an issue, something to work towards, a goal, and we're helping you with the financial planning side of this. So as student loans payments restart, what's your strategy? We hit the first one, which is the ideal, that you've got enough cash to pay that thing off. So what do? The second strategy is those of you that, I don't have enough cash to pay it off. In fact, I heard people say they were, keep making your payment and build it up into cash. I wasn't able to. I was unemployed and I've changed jobs now, blah, blah, blah. And so, now I just got to fit it back into my budget. What's the approach there? I think this is the majority of people.
Yeah. It's something that's trying to force its way into normal cash flow again. And even if it's something that you could have or should have anticipated, it doesn't mean that you did, right? It means that, the October payments beginning again feels like a curveball. It's something that you've got to adjust to, similar to other things just popping up in your life. But here's the thing. If over the past 3 years, clearly inflation has been a theme, right? Like life has gotten more expensive. And so whatever.
Your dollars are worth less. I'm sorry.
Okay. Same thing.
I'm sorry. You're on a roll. You're doing awesome, Josh. Forgive
Appreciate
me.
you taking me off track there.
Sorry.
No, if inflation has been a theme, and yes, things are more expensive because your dollars are worth less.
Yes,
I like that. That's both are true.
No, it's not that things are more expensive. You're because my dollars are worth less. It takes more dollars to do what fewer dollars used to do. I'm sorry.
Fascinating.
Sorry. My bad.
Here's the point, though. As life is, as your cash flow is getting pinched because of inflation, the risk is that they're also masking potentially some lifestyle creep that has happened over the same time period. As you are earning more, as you are spending more, things that used to cost $10 are costing $20. All of that has the effect of squeezing out what would have been devoted to the student loan payments. That's the natural effect. The only way to unravel that or undo that, if you can't just immediately go out and raise your income, is this is a budgeting issue, right?
Yeah.
Like you have to do the hard work of squeezing that capacity out again. And maybe there are some wants that have crept in that don't have to be there, and you need to maybe trim those back so that there's room for this need, this requirement. Maybe there's a different way for you to approach even the other requirements in your life. But at the end of the day, the dreaded B word, budget, for a lot of people, having a plan for your cash flow has to be part of the solution here.
I mean, here's why it gets more difficult. We now have record high credit card balances, so it's very possible inflation has caused you to, maybe with the intent of I pay the credit card off every single month, maybe you haven't been able to because there was an interruption in income, or it just got too high, or you thought everything was working all right and you could afford to do it. But now we have record high credit card balances and record high interest. We are also dealing with higher interest. So if you've gotten a new loan or made a big purchase recently, that's likely at a much higher interest rate. That's threatening your cash flow or making it harder for you to manage your day-to-day expenses, that sort of stuff. So you've got other things competing for these same dollars, and therefore it might hurt. It might be harder to fit this into the budget. What we've always said is if you're just building a zero-sum budget or just building a budget, it's not enough. It's not adequate. That's not the right cash flow management system for your present financial position. What you really need is a 3 bank account system where you've got your monthly budget, but you also have a plan and awareness for all of the non-monthly expenses that are coming up. And then you've also got a plan and resources available for something that comes up out of the blue, an emergency. We'll get more into that.
Yeah, I mean, Joshua talked about a lifestyle creep, and I think we all know at least one lifestyle creep. And I want you to think in terms of, is it an income problem or an expense problem? But certainly 3 years ago, it's easy to imagine that I have a new payment that I didn't have 3 years ago, or the payment that I used to have 3 years ago got paid. Think in terms of a car. Maybe I paid off a lower car payment. Now I have a bigger car payment. So there's all kinds of things. I would think at a bigger, kind of a higher level, and think, all right, I need to approach this as a business. So think Bernard Incorporated. Bernard Incorporated has certain income and certain expenses. And how does a business run? Well, businesses that stay in business run off of a budget. So a budget's not a bad thing. You are your own little micro business with your income and expenses. And so give yourself that attention. I just met with a prospective client who was an engineer, and he had all these spreadsheets and all this other stuff, but he knew his net worth to the penny. And I haven't, it's mysterious to me, but to me, the people that walk in and know their net worth to a penny tend to have considerable net worths. And so why is that? I don't know. That's not for this show to answer. But I do think what you want to have is you want to have an operating system for how you run this. And you might say, hey, listen, I did it. I'm doing it. I can do it. Awesome. If you can't, get some help, right? You might need an external stimulus. You might need a coach. The best performers need a coach. So if you need help, get help. Don't sit there and be unsuccessful in this attempt.
Yeah. You know, we often say that one of the things that a coach can help you with is the timing of or the frequency that you need to update or revisit your budget. You know, that needs to be at least annually. But really, anytime there's a material change in your income or your expenses, and holy cow, how many times have there been a material change in the expenses? It's like every week, you know, throughout COVID and since then.
Yeah.
So by definition, the fact that a new payment is going to be trying to force its way into your cash flow starting in October as these student loans pick back up, man, that is a material change. It's time to revisit the budget to make sure that there's room for this.
A couple points of clarification. We were saying October. It's October 1st. So at least I always view that as, well, that's your September budget because you got to make that payment before October 1st. But you've got to build out. So if your student loan payment's $200 a month or whatever, just know you're going to have to say no to something. You're going to have to make an adjustment. And the point with building that budget or revisiting it right now as part of your 3 bank account system is determine that in advance. And yeah, it's the middle of August, and so you've got a month or month and a half. Make the adjustment now. If it means, well, we've got to go out to eat less, 1 week or once a week less. Okay, fine. If it's, well, we've got to make some adjustments to the travel or whatever. Yeah, then do that, but make it fit. The other thing that I would, and we're going to start this now, we'll pick it up in just a minute, but I would take a look at all of your debt right now and take a look at all of your goals. And if getting debt free or paying on your debt or just your student loans is a high priority, then build a debt snowball. Determine how much in that monthly budget you can apply towards goal achievement, specifically getting out from under the debt. And hopefully you can pinch and adjust and adapt so that you have more available to apply towards debt than just minimum payments. And going through the debt snowball process with the CFP, that's looking at your entire financial situation, they're going to help you prioritize then what gets the lion's share of that monthly payment where you can pay that off quickly, and then where does that money go next, and you can build out a schedule. So I'm going to pick that back up. And then the third strategy for repaying your student loans. We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. All right, fourth segment. Oh, I know. So we can pick that up. We'll talk about then the other forgiveness plans briefly, and then planning for college moving forward. Sound good?
So we have 3 more segments?
We got to make it all fit.
All right, let's do it.
Hello, friends. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show, as well as a lot of other content, is on the YouTube channel. Go to YouTube, search the Wise Money Show, subscribe to it there, and turn on notifications so you're made aware every time a new talk show airs. But then also, all throughout the work week, we've got Next Wise Step videos taking one financial concept, applying it directly to your financial life. Odds are, if you've got a financial question or conundrum or curious about, well, as inflation comes down, do I need to make any adjustments to my investments, those sorts of things. All of those topics and more, that's hit right there on the Wise Money YouTube channel. So go to YouTube, search Wise Money Show, subscribe to it there. Okay, we're talking about student loan forgiveness, student loan payments restarting and what your strategies are. I think the second strategy is going to apply to most people, and that is, I don't have a big chunk of money to pay the student loan off. I've got to force this back in the budget right now. And what's the right way to do that? Well, you could just say, I'll figure it out. I'll make my first payment September 29th and I'll just work around it. We would encourage you to proactively build out that budget, taking a look at all of your monthly expenses. So knowing your monthly income, looking at your monthly expenses, fixed expenses, they come up every month and they don't change. And then your variable monthly expenses, they happen every month as well, but you've got some discretion on how much. So shopping or groceries or that sort of stuff. It can't be zero, right? You still need to eat, but you have some control over, well, how much are you spending at the grocery store versus going out and so on. And building in your student loan payment as a fixed monthly expense now and making other adjustments in your monthly budget. Then having your second bank account be where you're proactively taking a look at all of the known upcoming expenses, so the non-monthly expenses, adding all those up, dividing it by 12, and then saving as part of your budget, making sure that it fits, saving that amount into that second bank account every single month so you're prepared when those expenses do come up. That's the credit card prevention strategy right there. And then third, you've got a bank account that has built up some resources so that when the unforeseen happens, those emergencies, you've got resources right there as well. So if you build out that system, working with your CFP to say, all right, well, these are my financial goals. Hopefully getting debt-free or consumer debt-free is a high priority there. Well, in building out that budget, is there more goal achievement money there than just your stated monthly payment? If so, build a debt snowball. I'll just briefly explain it, then we'll move on. Sorry for the monologue here. Listing out all of your debt, okay, all of your consumer debt, your balances, the interest rate, and your minimum monthly payment. Adding all of that up and then comparing that to, well, how much monthly payment in total can I afford to make? And if it's higher, it needs to be higher than what your total minimum payment. But then that system will help you direct all the excess dollars, making the minimum payment on all the debt, except all the excess going towards one. and you'll be able to pay that debt off quickly. And then taking that entire payment and applying it towards the next one and the next one. Typically, the highest interest rate is where you should focus. If you've got a very small balance on one, maybe you can build some momentum there as well. Work with your CFP on that. Guys, am I missing anything on kind of building that in, building the new payment into your budget? Nope.
I like that summary. That was good.
All right. So then the third strategy, those of you listening to that monologue saying, no way, no, this doesn't work, or I did the math and I just can't make it work. My student loans are unbelievable. I'm breaking under the weight of how much student loans that I have, and the monthly payment, it just doesn't fit. Then, and I would urge you not to go directly to this personally, but then strategy 3 is if your student loan payment can't fit, then you've got to explore the existing forgiveness or relief strategies out there or programs out there.
Yeah, and these have been around for a long time, and we've done shows in the past on these. And boy, if the government was going to wave the magic wand and erase a bunch of debt for a lot of people, we wondered, well, how necessary or practical will these be? Well, the waving of the magic wand didn't happen. And so for some people, it's going back to the current rule book, the one that's been around for a long time, and saying, okay, are there systems or plans in place that would give me some relief on cash flow? Because my debt is just, if you compare my debt to my income level, they're just out of proportion with each other.
Yep.
And the government has a solution on this. And essentially, there's, I think, 4 different systems that you could utilize, different payment plans. But they all have a couple things in common. It's basing your payment on your income level and you being diligent at making a lesser payment over a long period of time. It's usually 20 years, sometimes 25 years. That's a long time for the debt payments to just be on track in your financial life. And so if your income is not high enough to bear under the weight of a full student loan payment, then budgeting for you is extra important because you're going to want to make sure that you are staying on track with this 20-year type of a plan. But usually it structures the payment as often up to 10% of your earned income. So essentially the government is saying in generic terms here that we don't want you to have to put too much of your income towards student loan debt so that you can't live life or maybe even are in jeopardy of becoming dependent on the government in other ways. And so these plans exist for people to do their part and to pay what they can. But you have to look into what are the options that exist for you. There's also existing repayment plans or loan forgiveness plans that exist, depending on what type of industry you're in, what kind of position you're in. Usually it's teachers are a big one, or government workers if you're working for nonprofits, that kind of thing. There's teacher loan forgiveness and public service loan forgiveness. Those are a couple of terms that you could be looking up, and there's a lot of really key details for you to be able to qualify for something like this, but it may be a source of relief for you.
But I've seen it. I've actually seen it happen, and when it happened for these folks, they couldn't, even up until the time that it was finally done, they couldn't believe it.
Yeah.
It takes me back to the whole ice cream thing. Are we really going to get the ice cream? They really got it.
Here's what you're not going to like about the income-driven repayment options. And again, if you're in this camp, then you've got to explore it. But I just want to prepare you for a couple of things. Number one, most likely your payment, your monthly payment, that is 10% of your discretionary income, whatever the calculation is, it might not even cover the interest. I want to prepare you for that. So each month for 20 years, your balance is going to grow. It's going to freak you out. I want to prepare you for that. This isn't just, oh, yeah, that makes a ton of sense. I'm going to do that. No, it's not for the faint of heart. That's pretty scary. And then the second is, this is at odds with you making more money.
Yeah.
And you're going to want to make more money so that you can increase your lifestyle, do more things, have more financial freedom, financial success. And this plan, income-driven repayment, whatever option you're going to do, is at odds with that. And so it's almost working against you. So let me just tie those two things together. It's very possible your monthly payment won't even cover the interest, so your balance will grow. And you're not going to want to make a lot of money. And that is a very challenging financial situation to be in. So just know, as we talk about this last option, I know we're just hitting it briefly. It's not for the faint of heart. It's not for, oh, well, if they didn't cancel student loans, well, I'm just going to go automatically to their current forgiveness programs. I'll just work that. Explore the other options first to make sure that you're a good candidate for this. Okay, so lastly, guys, we got about a minute left. How has this changed planning for education or college planning in total? Just briefly. We're going to cancel student loans. No, we didn't. We've paused loan payments, put them at 0% interest. Now they're restarting. How has this shifted and changed the education planning, college planning landscape?
Well, in times of uncertainty, seek wisdom. There were lots of folks that said, hey, if there's such a thing as student loan forgiveness, I need to make sure I have some student loans. And they have student loans now where they might not have had them. So there's all kinds of plan. This is what it tells me. It's not simple.
It's not simple. And you've got to look at your comprehensive financial plan. To me, I think that would be dangerous to just say, well, they were talking about student loan forgiveness. Didn't happen this time. They'll do it again. So I'm going to start borrowing. Now, work with your CFP, explore all options, and get proactive. Plan ahead. So, all right. That's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.